Okay, welcome everyone to the training webinar, what to do when you're second guessing yourself. Now, this is a key part to your overall trading journey, experience, whatever you want to call it. Everyone at one stage or another is going to be second guessing yourself, and you need to know what to do. There's a bit of a process, and we were trained at the banks or given a sort of a template as such, which was sort of just handed down through the ages, that if you got yourself into a bit of a rut, then all of a sudden you start second guessing yourself, then it's time to sort of slow down and put things into play, right? And you know what? Some of the markets we've been experiencing have been a little bit along these lines, right? The When we have sort of good market conditions and normal markets, if I like to call them that, where we have trending markets, particularly the US dollar. If the US dollar starts to trend, we generally do okay, right? Because it's so dominant across the financial markets. If there's a clear dollar up move, okay, usually higher interest rates, equities come off, the dollar rallies and everything falls, right? And it's the benchmark for commodities, for currencies, for a whole range of different things, and it's the focal point of the global market. So if the US dollar is doing well, then we do well, right? That's the easiest way to look at it. But when the markets start to discombobulate, you can get yourself into a bit of a flurry of, just sort of basically performance anxiety sort of kicks in, right? And what you end up doing is you end up having situations where let me just come back to the main page there, where you can potentially start over trading. And this usually comes on the back of having a couple of losing trades and not really understanding what's going on. But because you haven't been making money, you feel like you're losing money. And it's a slippery slope to get yourself back on track. And this is the sort of general process, right, that we used to do. So like you can look at the charts, right? Actually, the daily charts will give you an indication. And this is what you need to do as well. It's part of the assessment process, really, is looking at the major markets. And you know what? I encourage traders to really focus on the instruments that are in their time zone, right? And this is where you have a very close connection to the currency, whether you're in the UK or Europe, Australia, New Zealand, North America, you got the Canadian dollar or the US dollar. I shouldn't leave out the Swiss and obviously the yen in the Asian session. Now, all of these currencies are back online, right? As far as I'm concerned, BOJ is doing stuff, the Fed's starting to do stuff, and all the other central banks are sort of signaling that they are going to be cutting rates and these sorts of things, right? But you look across the board here over, let me just get Euro up because it's been the most frustrating major currency pair for many traders over 23. Okay, so you go back to, well, here's 24. Okay, it really hasn't done a lot. It's had a couple of moves, stayed there, and then just retraced. So in this situation, if you start second guessing yourself around what Euro could potentially do, then it's time to sort of take a break, right? There's a simple process here that you need to do, right? Because if you are, and this actually goes, don't actually even wait for losses. If you feel like, and you will know yourself, right? If you start to feel performance anxiety, take a break. And what I mean by that is you need to switch off the markets for a week or two, right? And now this, for some traders who are under pressure to make money, if you're trading full time, and I sort of say to a lot of traders, make sure you've got good capital behind you because you can go through periods where you're not making money over the course of weeks or a month. If the markets stall, and we've had a few major stalls recently, and especially, looking at the Fed at the start of the year, I thought they were going to start going in March. It now looks like it's confirmed September. That's been a long drawn out period of sort of like anxiety around the Fed. Give us some US dollar direction, right? So in that process, now I would actually say when you have a couple of weeks off, don't even look at the markets, right? Don't, because you can get suckered into a trade. And if you're sitting there thinking, you know what, I'm not trading for a week or 2 weeks. You need to be in a position where you've forgotten about what's happening in the market. And so I would generally say turn your screens off. Don't come back and sort of see where the dollar is or what euro's doing or anything else. What that will do, if there is a move, you'll be like, oh, I could have made money there. I could have made money there. Right. And it's not the case. Right. I'll give you two examples of where this sort of process comes into play. Now, you know, in my 20 years of investment banks, I saw a lot of good traders, even the best traders, right, come into periods where they had no idea what's going on, right? They actually were massively second guessing themselves. The first guy was a proprietary trader who'd been sort of in the market longer than I had. He's a big fella, knew a lot about the markets, didn't trade much, but when he did, he had, you know, positions of 200 or 300 million on the line, right? So huge risk parameters. And there was a period there when I was sort of managing the desk, and he would come over and he wasn't doing any trades. And I was like, now what's going on? How are you going? Yes, mate, I've got no idea. I've got no idea what's going on in the market, right? And this is someone with 20 plus years of experience. So he used to sort of call through on the open air phone thing if he wanted to place a trade, and he'd be sort of saying, okay, look, I want to just buy €1. And we're like, what do you mean? Like 100 million? He goes, no, just $1 million, right? It's like 10 lots, right? Compared to like trading 3,000 lots, one lot. And he was doing this for like a week or two, right? And he hadn't traded for a little while, but then he was basically sort of coming through, and you see the next trade. Can you sell me £1? And you're like, 100 million sterling? No, just £1. And that went on for about 2 weeks. And a lot of the guys on the desk were going, wow, what's going on with old Johnny over there? Has he lost it? Has he lost his marbles? And I said, no, he's second guessing himself. I sort of caught up with him for a beer just by chance, not to really sort of quiz him. But then we got talking, and I said, listen, what's going on with your trading? He said, you know what? I'm absolutely second guessing myself. You know, I feel like I've got no idea what's going on. So he told me he hadn't traded for a couple of weeks, right? Had been coming into work, but not trading, just reading the newspaper, right? Having a look at the internet, not looking at the markets. And then when he felt like he was ready, he just turned his screens back on and had a look what was going on, right? And just starting from scratch, following the basic parameters of the pre-trade routine. Now, if I get that up, right, let me just move that across. If I get the pre-trade routine up, it's sort of basically starting with analyzing the markets, seeing if you can identify where the market direction comes from. Okay, that's what he was trying to do. But the most important thing for him, like the trades that he was placing, wasn't about making money. It was about instilling confidence in your system, right? So what he did is he came back, and this is what you should be doing too. If we had like non-stop markets, I'm talking about through the weekends, like when you're on a good run, I used to get really disappointed about the weekends because it was like, no, I've got a great connection with the market. I'm in sync with everything. And the weekend disconnects that synchronicity, right? And that's disappointing. And it's hard to sometimes get back into the groove. But when you are, you don't want the weekends, or you don't want to go on holidays either. But the key part to switching off, if you start second guessing yourself, right, is you come back, take a break, a week or 2 weeks off. You come back, refresh yourself, go through your technical analysis. Looking at things on a daily perspective, I would think starting as your starting point. Have a look across the market, see if anything sticks out, right? And then you'd come back into the hourlies and then see if there's any matchups with the longer term trend and the short term trend. Is everything in line? What you're looking for is like a no-brainer trade that stands out. And this lines up, obviously, where once you understand which ones are going up, which ones are going down, short-term and long-term, it's easy to pick out the side of the trade. So when he was coming through saying, listen, I want to buy €1, right? He was going, you know what? Long-term trend is up. short-term trend is breaking higher. I just want to get into this trade. And it was all about confirming that he was back in the groove with the market, right? And you'll be surprised, one winning trade can change your whole mental outlook, especially trading. You could have 3 or 4 trades, half a dozen, 10 trades, losing trades in a row. You have one good trade, you forget about the losers, right? And this is, you've got to have, in trading, you've got to have a short memory with regards to your P&L, right? You don't want to be sort of thinking, I've just had a losing trade, and start second guessing yourself instantly. You would start second guessing yourself after you have had a string of losing trades. So you've gone into a drawdown, right? Your trade size, you've decreased your trade size, and then you've gone into another drawdown after that. Well, that's when you definitely need to go about this, right? Starting to look at the markets with trying to be as objective as possible, okay? And the key to that is, if I just minimize that again, is coming back to looking at the markets here with just a little bit more clarity around what is actually going on, okay? And this is where to remain objective, right, which is the optimum thing that you want to be doing all the time. Like, you want to bring subjective experience in, like, okay, I've seen this before, this is what's probably going to happen. But as far as like going, yeah, the numbers are a little bit up, a little bit down, but you know what, overall they look good. You're not the one deciding that, right? The market decides that. And you know what, if you get the short term and the long term direction right, well, then you're going to be back on track, right? Then you can come back and try and it's like peeling back the onion, right? Like out of Shrek. The sort of same sort of situation here. The economic fundamentals can quite often overlap and start interrupting each other and stopping moves, this, that, and the other. So a 2-week break or 1 or 2 week break will allow you time to reset, right? And at that time, if you are in drawdown, you should already be thinking about a smaller trade size. Now, there's 2 ways you can go about the trade. And I'll come back to analyzing the markets in just a second. Now, it might be wise, and I don't like to encourage it too much, but for the purpose of getting back in the game, yeah, just sign up with your broker or a broker and get a demo account. It's like time to actually sort of put some trades back on without any risk. But you know what? Or you use your live account, but just really decrease your trade size to a really small amount. And once again, the aim of placing that trade isn't about making money and getting some of your cash back. That will happen. But it's about getting the confidence that your decision-making process is back online. You are back in sync with the market and you can connect. Because if you stay connected to the market, you know, say 3 months without a break, and you need, like, even if you're having a good run, as soon as you have a losing trade, you should switch off, right? You've got to have a break. And in the banks, they make you take breaks and they make sure that you are not allowed to trade. You can't even call the desk. You can't do anything. They want you to completely switch off and refresh. Because if you're reading the news and you're connected to the market the whole time, you know what? You're just going to get swallowed up by too much news, right? There's so much news. And if I just scroll down here through the various, you know, there's a huge amount of news on various instruments. So you've got to disconnect, right? Now come back to the market, look at the market with some clear eyes, just start to identify short-term and long-term trend. When you understand, right, say you're looking at euro and I know it's going sideways, but it's going up. Well, then you're like, okay, this is good. This stands out. Now I can come over to the next step. And this is where you need to have a little bit more, you know, like a technical trade is good. And if there's no data coming out, well, then just placing a technical trade is probably the easiest thing to do, right? Wait for the trend to come or the trend to sort of continue. Either say if euro's going up, buying on a breakthrough resistance or buying on a dip towards support. Easy, right? You feel confident in the market and in your ability to read it. Then you come back and start to look at the economic fundamentals. Try and get a bit of an overlay of what's actually happening in the market. So, you know what, just looking at what's coming up. Where are we in the cycle? You know, each month has the same routine, right? The first week you have non-farm payrolls. Second week, usually the CPI. But there's a whole, like the first 2 weeks of each month are where all the key macros are generally. Okay. So you can actually come back and have a look through these and check things out. If you have got meta stock, which I would highly encourage you to do, right? You can come back and just isolate a specific pair and just look at the data for that pair, right? If you've got the latest version of that LSEG own, right? These guys are being a little bit nasty with their subscriptions, I can tell you. But you have additional information like these interest rate probabilities, right? We're going to put something similar up where you can have a look, see what's going on in the market with regards to central banks, right? And digging in a little bit deeper, this can give you a bit of it's like a data download, right? As into what you can expect from the market. Now, the probability distribution, if you're looking at this, you can actually see, well, a little bit of a blackout there. If you're looking at the distribution here, you can see that the Fed is due to cut rates, right? Expected to, right, over the next 6 months at least. So that gives you, okay, so that means euro should go up. So you can actually check out euro. So there's a couple of different things that you can do with regards looking at the market. But basically, you're just starting to, like you've just logged in, you're looking at the markets, trying to work out what's going on. But realistically, even for a short-term trade, once again, if we had euro here and it was going up and short-term and long-term, all we have to do is the next step, I would think, even a small trade would be you've got to see, say, a key macro coming out, and whether it's a weak US number, which pushes euro up, or a strong euro number, which pushes euro up, place the trade. The idea is to step back into the market with small trades, build your confidence, you're back in the groove and you're back in the game, right? Then you can start coming back and having a look at your, you'd be doing this process as you go through it, fine-tuning your technical levels. Are you trading at market or technically? And then looking at the timing of your trades. And it's at this time, I would sort of come back and have a look, right? Don't reflect too much immediately on your past performance, but get back in the groove. You're like, okay, I'm back in the swing here. Try and then come back to your overall performance and go, check out where your last losing trades were and what was the culprit, right? More often than not, right, it would be the fundamentals colliding, right? And you get inconsistency with the general movement in the instruments. And this is where, euro has been largely asleep for 2024. And the dollar index, which is basically a large reflection of euro, it's like there's no clear direction on the dollar. It's sort of jagged here, jagged there, but no clear direction. What you need to be doing then, you're back on track, you've got direction, you're making some cash. It's now time to step it up, and you're looking for all the ducks to line up, right? So basically, it's a complete reset. You are trying to get as many of these ducks in a line, get back in the groove. The next trade that you place, very important, is a winning trade. Or at the very least, you get out at break even, maybe for a small loss, but you have the majority of the key factors that you need to be in play lined up for you. Okay. And if you do that, right, you've got to be patient. You'll be back in the groove. You'll have a winning trade, and your confidence, you won't even remember the actual bad spell. You'll be just thinking, yeah, I remember that was tough, but you know what? I'm back in the groove. And you'll have a lot more empathy for traders. If you're in the Discord, you're talking to traders and someone's going through a bad run, you'll know exactly what they're talking about. I connected with this when I was in New York, working in New York, and I used to go to baseball. And I used to watch the baseballers, right? And you'd have someone, whether it's Derek Jeter or someone for the Yankees, hitting it out of the park, right? And he would see a guy that wasn't actually hitting anything, right? No runs over like 30 or 40 innings. And then he's like, or at bats. And you see the rest of the team group around that guy. Like, don't worry about it, mate. Next time. But you know why? Because every one of those guys knows the bad run could come for them next, right? And they want the support of everyone else. And this is the same, well, largely the same sort of profile that happens in the banks. Unfortunately, there's a bit more competition in there over positions. So some of the guys will be cheering it on, and quietly, but you hear the rumblings. As a senior manager of the team, it's my job to pick these guys up off the floor and go, listen, just take it easy. And then I was sort of coming back and reflecting on Johnny that was at least a $200 million trader, as in position size, just trading one lot, and it was a good lesson to pass down. Now I'll tell you another guy, Scott. He was sort of had a bit of a German background, right? And we got him into the team, and the situation with him, we didn't even realize, or the management didn't realize. I wasn't directly responsible for him. He was another trader off the prop team that had come off the main trading team and had been trading. He got himself into a massive second guessing situation, and he did not take a break for like 6 months, and no one realized, but he hadn't placed a trade. He'd put a trade on and then take it off, put it on, take it off, like for 6 months, because he didn't have the disconnection. And he actually completely lost his marbles. I think they ended up giving him like 3 or 4 months off because he started going a little bit, he was having sort of like definitely mental stress, right? And could not and did not believe any position he put on was right, and he'd take it off. And of course, some of those positions would go straight into cash, and then he would get in and then get out because he was always worried about missing something or worried about losing. And that's what happens when you start second guessing yourself, right? You will be in a bad mental position. So what you need to do is you need to come back to what you enjoy doing, okay? And I'm talking about outside the market, family, socially, sports, right? Go and buy a dog if you haven't got one. The key thing is get back to your core essence, right? The market does discombobulate. It does. And as I'm sort of telling you, I've been doing this a long time, and I go through periods where it's like market anxiety. It's like, give us something that stands out. Because if it doesn't, the danger is if you stay in the market and keep looking at the markets every day and focused on it, you will start placing trades that have a very low risk or low probability opportunity. May not be a high risk trade, but it's a low risk because you don't have clear direction. You're thinking the dollar goes down, you get some moves where it sort of jacks up and then comes back down. You know what? The actual instrument hasn't moved from where you got in, but you've been kicked out at the top of the range. And that definitely, if you don't take a break at that point, you will start to just trade your cash away, right? The key part is have a plan, right? Part of your plan you need to have, I would be sort of talking about here, give yourself some parameters here. What's the win rate? And this, it doesn't have to be a P&L situation, right? Because you might be adjusting your trade according to the opportunity, and you might have a couple of things lined up, but trying to trade at market on economic fundamentals, and that goes a bit pear-shaped, and then you can start chasing a tail. But if you give yourself personal goals, not just P&L goals, but your win rate. Say if your win rate drops below 50%, that could be the trigger for you, right, to step away from the market. Because if you're not already second guessing yourself, I'm telling you, you should be, because if it does that, you're in trouble. Maximum risk per trade. Keep a very close eye on, give yourself, as your capital grows or shrinks, make sure you align that and go, how much cash am I going to risk per trade? And it doesn't really matter about the account size. Say your account's a 100K account or 200K account, right? $1,000. So that's where you stick to. And that could be a maximum risk per trade. Risk available, right? You may have, $5,000 before you hit the next drawdown level, but you can actually set specific goals for that. So one thing that you can do is maybe you calculate 3 losing trades, just put in $3,000. And if you haven't had a losing trade yet, you might be at 3,000, or you might want to reduce that to what it is. And then really start to focus on the target, number of trades to the target. So if you're looking to step up, okay, to the next level of your capital, maybe it's 5K. right? You work out if you have, and you might average it, right? So on a normal trade, I'm looking for 75 points, but we're sort of seeing that sporadically, but really it's more like 30 or 40 at the moment. So you might work out, okay, if I'm working at the trades, how many trades, say, of 40 points we're going to need to get to 5K, right? It depends on your trade size. And that comes back to your success, because as you start having winning trades, that your trade size increases. So you can really work on that. But part of what this process does, it starts to make you objective again, right? And when you start second guessing yourself, it generally means you are being very subjective with your trade selection, and generally mainly around the fundamentals. As I said, when the markets discombobulate, you get central banks, their plans and their forward guidance sort of matching up. It's very hard to sort of work out what's going on. You should know by now that coming and look for the crosses. Okay. The crosses can be where the action is, especially if one central bank is behind another with interest rate movements, right? So, but you won't see that if you're already second guessing yourself and not using the pre-trade routine. Then there's a huge potential for you to come unstuck, right? The whole aim of this is to be objective. Okay, when you come back to the market, switch on. Okay, analyze the markets in detail, right? You're going through this process. And when I look at this, and you'll notice as a professional trader, you do less trades than the normal sort of, well, I guess they call them retail traders, right? Inexperienced wholesale trader. So if you're looking at that, you're looking for opportunities, decide where to get in, manage your execution, right? And then once you've put the execution on, it's acceptance, right? Which means, okay, I've done everything I could. This trade looks good. I'm in the trade. And then you've just got to switch off. Now, going through that process, if you're in a drawdown situation, having a small trade size will make it easier for you to go through these last two steps, right? Which is the most important, okay? If the trade doesn't work out, then you can, because it's a small trade, it doesn't really impact your account. You can come back and work out and isolate what was the problem here. Was it the economic numbers, or was it the entry level? Did I get, did I not get in at the right place? Generally speaking, it's usually around the timing, okay? But we'll be able to manage that. And then when you come back into the trading situation, looking at your performance stats, okay, and how much risk you've got available, and the number of trades to target will keep you focused. I can tell you, if you don't have, especially the amount of risk per trade that you want to be allocating, if you don't keep track of that, that will go just to maximum risk every trade. And that'll be this here, right? I can tell you, I've seen it a lot. I've done it myself. If you start second guessing yourself, you don't walk away from the markets, you will start chasing every economic number that comes out, right? And you will start trading excessively until your account is completely like unrecoverable, right? And that, when it's your own money, it's a disaster. And that can affect you mentally, financially, impact your relationships, a whole range of things. Okay, so let's just sort of summarize, or not summarize, but sort of just come back through that. So once again, if you are second guessing yourself, you've got to have a couple of weeks away from the market. Now, either continue trading your live account, right? If you do, like even trading 0.1 or 0.5 of a lot, whatever it might be, just a small trade size to get you back in the groove after you've had a break for at least, I'd say at least probably 2 weeks. 1 week, you're only just starting to get out of things. Like a week and a half, 10 days. No, that's 2 weeks of work days. That's usually enough to sort of clear out any sort of bad feelings or emotions, and then come back to the market. So a demo account, if you don't want to use your live account, get a demo account, right? So with that, do not go in and start trading 10, 20, 50 lots. That is pointless. The idea of having a demo account is just an account that doesn't impact anything. So it takes that last level of emotion out, but still trading one lot or 0.1 or 0.5. Okay. The idea is confirm that you know what you're doing and that you're in sync with the market, and then you're back in the game. Then you can step it straight back to where you were. So if you've been trading 10 lots and you had a drawdown, say you're at 5 lots, well, then you're back in at 5 lots. Or, use some judgment and go, you know what, I'm just getting back into it. I need a winning trade here. I might trade 2.5 lots, 3 lots, and you have a winning trade, then you're back to 5 lots. You have a couple of winning trades at 5 lots, you're back at 10 lots, right? This is about not letting the market win, right? And what I mean by that is the market is just a beast, right? It's a living, dynamic organism. And as I said, this thing here, the economic numbers or the fundamentals can go into a situation of confusion, and that throws out the general short-term, long-term trends, and you get chopped up. The idea, the more experience you get, right, and being able to manage yourself when you do start second-guessing yourself, you'll be able to read that situation a lot clearer. As soon as you see something doesn't add up, right, over a period of a couple of days or a week, you just go, I'm out, right? And that's where you get better. And that's where I'm a lot better these days, is if I don't see something that absolutely sticks out, I won't sort of get involved. And as an example, right, the Aussie dollar, right, weaker inflation numbers yesterday, sort of on par, but the RBA numbers were weaker. I was waiting for the Bank of Japan to do their sort of bits and pieces, and they did, and then the move didn't line up. So you just go, you know what? That does not make sense to me, right? And whatever your level of experience, if the move doesn't make sense, right, what is happening, then turn the screens off. Do not sit there and stare at them, because you will just get into the trade. Would I be buying Aussie here? Not really. Not really at the moment. I need the market to give the market a little bit more time to work out exactly what's going on, right? Because don't forget, we've just had the Bank of Japan hike rates, which pushes dollar yen down. We've just had the Fed talk about cutting rates next month, right? Fully factored in. So yeah, Aussie's going up, but their cycle is sort of turned down as well. But you know what? This is confusion. Do not get suckered into situations. Don't let the market sucker you into a trade that doesn't make sense. Like a trade that makes complete sense, and a lot of the trades do after the event, is the Fed, right? Is oil's rallying. So the Canadian dollar is going to rally. Then you have the Fed on there as well talking about cuts. This is probably the smartest trade. It already sort of broken down. But don't forget, there is a lot of volatility around these central bank meetings. So when you are coming back to the market after a period of a week or two off, do not rush in and start trading the CPI and most importantly, the unemployment numbers straight off the bat, right? You are asking for serious trouble. We are looking for, when you come back to the markets, generally what we're looking for is to try and get into a nice trend trade, right? And you can do that by looking at your charts. You can see where the levels are and start sort of mapping out how you're going to make some cash, because the next trade you place needs to be a good one. And when I say it needs to be a good one, it needs to have substance where you know direction, either short-term or long-term or both, right? So you know you're exactly a buyer or a seller. You're looking for your entry levels, and then you're just waiting for the timing. The fundamentals, yeah, you can wait for those to line up. They will be sort of getting built into the long-term trend, and then you're back in the game. So what you're doing is, when you do start second guessing yourself, it means you've gone out of whack with the whole pre-trade routine, and you need to come back to that. But unfortunately, and I'm not here to tell you there's a quick fix, the fix is turn off, right? Turn off from the markets and then come back, start analyzing the markets and take your time. You want to make sure you're lining up a good trading opportunity that makes sense. And right now, a lot of these trades, like dollar CAD, makes sense to me. I can make odds and ends of that. I can make odds and ends of why dollar yen's going down. Dollar Swiss, well, you know what? They're buying yen, they're buying Swiss. So that's probably it. The rest of these instruments, like euro, sterling, Aussie, and Kiwi, not sure what's going on with the pen there, are all out of whack, right? So I sit back and I just wait. So this is the best way to do it, right? And give yourself, just understand too, I generally, if I have one losing trade, I will generally wait for a cracking trade, right? So I will wait longer to get a good trade on. Whereas I know a lot of traders who are reasonably new to the market will sort of just jump straight in pretty quickly. Okay. So that's the process. If you are second guessing yourself, that's what you've got to do. And as I said, that's what the bankers are doing, right? So if the bankers are doing it, and these guys are professional traders, that's what you need to be doing, right? I had the guys in the banks give you a couple of experiences. One guy who completely lost his marbles, right? Because he was second guessing himself, didn't take a break. And then you had another guy that was doing the right process on his own, right? A massive risk taker coming back, small trade, just to confirm that he knew what was going on. And then he was back in the game straight away. All right. Any questions on that one?
No, I got it.
No, sorry, Leonard. There's a bit of a repeat there, but I just really want to rub it in because this is really important. Every trader is going to experience this, and not just once. You'll go through periods where you start second guessing the market, right? You're thinking, is this right? But you know what? It is a quick fix. If you're not having losing trades, and this is where I would like you to sort of get to, you make that decision before you have the losing trades, right? Usually, sometimes the market discombobulates. You've already got a trade on and you get caught up in it. But being able to recognize the dysfunction of the market, especially the fundamentals, will enable you to go, you know what? I can feel what's happening here. I'm disconnecting, right? And that's with a little bit more experience, all of you guys will get to that level. All right. If anyone has any questions, by all means, jump on the Discord or you can reach out. This is, as I said, more of a learning experience. I've had a number of traders already ask me, am I recording this? Of course I am, because I know we have gone through a period of confusion or sideways, whatever you want to call it. And that's, you know what, be better to turn off than to watch all that crap and then come back fresh, especially with some new direction in play. All right, guys, thanks for joining me. Hope that makes sense, and have a good day.
Thanks, Bradley. You too.
Cheers, Leonard.